Alright, so welcome back to another video. Today I have a question for PJ, and it's regarding, PJ, why do we want to take risk, or why do we need to take risk on an investment? Why not just put the money in the bank or to a very conservative portfolio, and then there won't be the volatility and we will have a much easier job. People won't get mad at us and it's much easier for everyone. Isn't it a win-win? Don't take any risk, have a smooth
in a bank
home.
Actually, you get some interest. A lot of people just leave it and don't do anything about that. The biggest problem why advisors tell you to invest in shares and have a long-term approach is because if you put it in the bank, you let's say get 6 or 7% return, you actually lose money in the long term. And you lose money because of inflation. Inflation is that thing, if the 100 Rand I have today, this year, I can buy a gin and tonic at Culture Club. But next year it's going to be 110 Rand. That's inflation. It's exactly the same. Our parents said, when they were young, they could buy a wimpy burger for 20 cents. Well, that's why inflation, each year the prices go up. And inflation is normally like 5-6% already. But that's inflation if you take into account bread and fuel and all that stuff. But if you're middle class and above, your inflation is quite higher than that, because medical aids inflation is closer to 9-10%. The same with university fees. So let's say your inflation is in 8%. So if you only put your money in a bank account where you get 7% return before even tax is taken into consideration, you actually get poorer each year. So that's why you should take risk on your investment portfolio, just to keep level. And we want to grow wealth. So if you want to grow wealth, you can't put it in a bank account. You need to be invested in shares. So let's take an example. Why we say invested in shares? Because let's say you buy the share Shoprite Checkers. They can increase their prices with inflation each year, and a bit more than that. So you get the growth of the company, and you get that earnings growth they get because they can increase the prices with inflation. So you get more than 9 or 10%. Theoretically, we know each year it goes a bit up and down. But that's why in the long term you need to be invested in shares as well to grow wealth. Otherwise, you're going to lose out.
Yeah, 100%. I think just to end on an example, a client asked me that, said to me the other day, why is this negative returns? I'm retiring in 9 years' time. I cannot afford negative returns. And I think you answered the question where if you don't take risk at all, that's the biggest risk, because you're gradually either just staying where you are or even maybe slowing, going backwards, and you will not be able to afford what you can now with the same amount of money. So
that's exactly it.
With investing, you definitely want to achieve inflation or above and need to take some risk. Thank you, PJ.
Thank you, Joe.